How is it that we're seeing prices increase time and time again? New all-time highs on the stock markets, new all-time highs in the real estate markets across the globe, and eventually new all-time highs for Bitcoin and some select altcoins. Yet, I'm preparing for the worst ride of our lives. That's the topic of today's video, so make sure you hit up that like button. Let's go for 2,500 likes in today's video and subscribe to the channel if you have not already done so. It's your home of macro cycle analysis covering Bitcoin, crypto, the stock markets, and of course, the real estate cycle. Today's video is a little bit more of a discussion with you, especially around how I trade and how I invest and how I prepare for these times ahead. Now, as I said, I still see the prices going up. We're in the winner's curse phase. This is my theory. And especially how I've been trading over the last several years, looking at those lows from 2020, riding the waves up and down, and now coming into this final peak of the macro cycle. And yes, I do believe, and this is how I'm trading, which is why it's how I've titled my title, The Worst Ride to Come. From my experience of 2005, 6, and 2007, so going back nearly 20 years, those moves to the upside when I was getting into real estate were pretty wild. The daily news was only talking about stock markets at new all-time highs and real estate prices going up. And then, almost without warning, at least to 95% of the people, you basically see a collapse on the other side. Fortunately for Australia, we didn't get it then. I don't know if we'll be so lucky next time around for our real estate prices, but of course, we'll wait and see. Now, in terms of the worst ride, if you're not fully positioned, the ride feels awful because you're missing out. And then it only feels good when you're in. And then when you see the big swings in this winner's curse phase, it destroys your soul. And that's what it is designed to do. To me, and maybe it's my contrarian approach to the market around significant turning points when I see and feel that there is a good trade for me, that they're the times that I find the most difficult, and I think they're the wildest rides. Normally, you'll be expecting everyone to be talking about bull markets like it's the best thing that's ever happened, and everyone's going to get rich and we're all going to live happily ever after. But I think most of us understand that is not the case. We're seeing higher and higher prices in what has been dubbed the most hated bull market of all time. We'll see how that continues on in the future. But I've talked about this many times. Why I think it's the most hated is because most missed out on this ride to the upside. And I think, and as you can see from the charts, just getting steeper and steeper, there's still more money to come into these markets, and it's going to continue to push these prices up potentially faster and faster over the coming years, with what I'll show you in terms of the data, potentially significant volatile swings from all-time highs to corrections, which might scare people into thinking that the ride is over and that you've got to prepare for the bear market and the massive recession that is to come from all of this money printing. So we've got the most hated bull market in history coming into the winner's curse phase of the markets. Of course, a lot of people are interested in Bitcoin and cryptos, and I still see them having a final leg up as well. But I want to turn our attention to some of the veterans in the space. And I like to listen to the guys who have been there before over the last 30, 40, 50 years. In the case of Paul Tudor Jones, he's now 69, born in the 50s, net worth of $8 billion. And I've read about him quite often in the books Market Wizard. So maybe you guys have seen these books yourselves. If you haven't, definitely check them out. Great reads. There's maybe 7 or 8 in the series. This was the first one that I looked at. I think it's the first one of the series as well. And this is one of the newer ones that is out now with some people that you might know from Twitter as well that are in this particular book. So Paul Tudor Jones was in this book early in the days. That's where I first learned about him. $8 billion. He's a trader. He has some Bitcoin, so if his net worth is 8 billion, as we just saw there, and he's talked about having about 1 to 2% of his assets. Quick maths, about 80 million to $160 million in Bitcoin and crypto, far more than anyone that I know. Maybe you know more people that have more than 100 or $200 million in cryptocurrencies. And it says here a year later, he wanted to allocate allocation of Bitcoin to 5%. So if that's 5% of his net worth, Maybe it's somewhere around 400 million. Even if it's half that, it's still a ton of money. But anyway, he's gone through the hard yards and seen how these markets work. And every time I read about traders that have been around 30, 40, 50 years, you got Warren Buffett, you got Paul Tudor Jones, I've got Stanley Druckenmiller as well. They all say the same thing, and it's exactly different to what we hear on YouTube and X about the markets when they get into bull market territory. So you go through your subscription list or search for crypto, search for Bitcoin. What's happening with Bitcoin and the pump? And they're all saying, yeah, it's great. Just keep getting on. It's a major bull market. Every time you read about someone who's actually done the hard work, they are all very, very conservative when it comes into these bull market periods. Don't be a hero. Don't have an ego. I mean, cryptocurrency is the exact opposite, right? Everyone's a hero. Everyone has an ego, including myself. Yes, I've got to keep learning. Always question yourself and your ability. That doesn't happen in crypto. Who questions themselves and their ability? We're all amazing traders in the bull market. Don't ever feel that you are very good. The second you do, you are dead. Like the way they talk about the markets is so depressing. It's like, why would anyone get into these markets? Here we go, another one. First of all, never play macho man with the market. Second, never overtrade. Paul Tudor Jones again. And then at the end of the day, the most important thing is how good you are at risk control. Risk control. It's just, this isn't fun. None of this stuff sounds like fun, especially with crypto. Meme coins going off. Everyone rides it up. They have fun. And then it almost always comes all the way back down and they don't make any money. 90% of any great trader is going to be the risk control. And so you'll see a pretty significant highlight here, a comparison that keeps coming up, a feature. I can't think of the word right now, but essentially it's about risk control and watching what the market does, like understanding human psychology. Druckenmiller, he's worth $6 billion. He's 1953, so a couple of years older, thereabouts, than Paul Tudor Jones. 6 billion. Does he own any Bitcoin? I don't believe he does, but he says he should. He does own gold. He's 70. Who cares? He's towards the end of his life. Maybe he's got 10, 20 years left. What does he need to own Bitcoin to be another multi-billionaire? He's already got $6 billion. End of the day, he understands the principle around it. Druckenmiller's quotes here: the way to build superior long-term returns is through preservation of capital and home runs. I think Bitcoin and some cryptos will be very, very big home runs, but I'm still going to preserve my capital. And I'm going to get to that in the video as well, with strategies and ideas how to preserve the capital. This is the big thing. How do you preserve it? One idea I like to preserve with real estate. Land, real estate, it's been here forever. That's where we live. That's what we live on. It is the preservation of capital, in my opinion. Of course, there's Bitcoin as well, but real estate, I mean, that's been proven now, and you can get a return on your real estate. Anyway, hit your home runs, okay? When you have tremendous conviction on a trade, you have to go for the jugular. It takes courage to be a pig. So marry that with what Paul Tudor Jones is talking about with his quotes. Don't get overconfident, and then have risk management as well. And then we get to the end of the peak. As I said, I'm preparing for one of these like worst rides into this peak. A bull market is like sex, from Warren Buffett. You want to learn about sex from a 90-year-old? Let's do it. It feels best just before it ends. Probably speaking to my 93% of the audience, which is male. Bull market is like sex. It feels best just before it ends. I mean, it sounds good, but it ends, and it's a pretty wild ride into those peaks. I got some bull market quotes here as well. The last leg of a bull market always ends in hysteria. The last leg of a bear market always ends in a panic. We saw that in November of 2022 at the low, and some of you guys commented when I mentioned the FTX collapse. I said, this is what a low feels like. Majority of people, they were looking for further collapses. They were calling for 12K Bitcoin, 9K Bitcoin, $3,000 Bitcoin. And I said, at the end, this is what it feels like. And at the peak, you're going to feel like what our 90-year-old friend here is talking about. It's going to feel like sex at the top, right? All right, I don't have too many more of these. We'll get into some charts. We'll get into some data as well. Bull markets are great, but they breed complacency. Bear markets can be energizing. That's why I get so much more excited about the bear markets at the lows, and it's about having patience. Again, the guys who have been following on the channel, you subscribe to the channel, that's exactly what I was talking about around those lows. I had the patience. Sure, the low came in June 22 and we kept riding it out. We didn't buy the exact low, but we bought at 17, bought at 25, bought some at 16, 19K. The point here is the bear markets, at least to me, I can feel this now after so many years, bear markets can be energizing. Instead of fretting over the decline in your net worth, think opportunistically about all those bargains and the potential gains when inevitably a bull market returns. Take that with a grain of salt, that last part, because if you're thinking about crypto, I mean, the majority of stuff is not going to return, but you've got a few that do. All right, so make sure you get a copy of that, read up on this stuff, maybe watch this again as many times as you want, or just go and find some more info on market psychology. I believe I had one more here from Gan. Gan, our favorite trader, best trader, I think, of all time. A successful trader studies human nature and does the opposite of what the general public does. Now, that second line I would take for the turns in the market, and it's a little bit harder to get those turns. But as you go on with experience in your trading and investing journeys, that is going to be a big one that you pick up. Do the opposite of what the general public does at extreme points. You need to have it very much crowded in your favor where you can go against it. But during periods of the market, everyone is going to be right, which is the way I see the market turning eventually, because the markets just keep going up and eventually you're going to see more and more people get into the market. They're all going to be talking about the profits that they're making. And at that point, you don't want to get complacent, as some of the other quotes I've talked about here. Don't get complacent at the peaks. These are the times in the market that I really enjoy, and I'm able to share this with you on the channel, because when it gets to the bull market, I can't talk like this. I can't talk about these things because the masses do not want to hear it. They only want to hear party times and that they're going to be rich and live happily ever after, get out of their jobs or whatever might happen. But these are the times to prepare. Yes, I've said that the next stage is the worst ride of our lives, because I think there is going to be some very heavy volatility as we lead into that winner's curse phase. So join us on the channel, subscribe. Links in the top of the video description for our end of year sale right now, end of financial year for the Aussies, but everyone gets a part of it. Link right up here at the top of the description. So check that out. And if you just want to see some of the reviews from the guys here in the group, this guy here, 69 years old, it was trading for 20 years at Forex, still was in the red, found TIA premium, and now has finally been making some profitable trades. So if you want to check out some more of these reviews here in our free Discord, link in the top of the video description to subscribe to the email, and you'll get an automated email that gives you that access there. All right, guys. So in terms of the volatility here with the NASDAQ and how I suspect, or what I'm preparing for when it comes to this final leg of the winner's curse phase, which can last longer than most of us anticipate, as the old saying goes. We've got a few signals here. And they're mostly around sort of breadth signals. You've got very few stocks pushing the prices up and a lot of stocks hitting new fresh lows. It doesn't mean that the cycle is over. It doesn't mean that the stock market is going to top, but it is showing us that we might see some volatility. Anyway, this one is the Titanic syndrome alert, flashing some early warning signs. It highlights a technical market condition when stocks have recently been at a high, and then there's a sudden jump in new 52-week lows versus highs. So a lot more stocks have hit lows than highs. Now, this signal has shown up at many of the peaks. Some of them didn't play out as bad, but you can see that it took quite some time. So that's the other part to play in it, that it can show up time and time again into these tops. This one here is the .com bubble, which we're seeing a lot of comparisons with at the moment for the NASDAQ. And you can see here that the signal on these red dots here, and this is the price chart of the .com bubble, the NASDAQ obviously, it showed up a lot. That was in early 1999, and then the peak came in early 2000. So there was still 12 months in that with all of these signals before it basically rolled over from that point. You got 2007, 2008. The market didn't really go anywhere through that peak, but it still showed up, and you had 6 to 12 months again of these tops. You've got sideways periods through 2015, but again, in 2015 there were a couple of corrections later. So the signals showed up, market went sideways and climbed up slowly. It was a grind, a few little corrections, and then it kept going. So then this next one in 2017, very little effect, so on and so forth. You got very little effect here. There was a bear market in 2022. And you had COVID crash and then again back at new all-time highs. So what I'm talking about here, what I see in terms of this data is, yes, it's shown up a couple of times at the ends of cycles, but the main thing that I'm looking out for here is the volatility in the market when you start to see some of these breadth signals, just to watch the market catch up. Some of the, maybe the slower ones are trying to catch up. Maybe there's a bit of profit taking on those few stocks that have just been hitting new all-time high after new all-time high. This one again is the NASDAQ 100 rises to record highs. Fewer stocks are in the uptrend and more are hitting fresh lows. So again, very similar to the last piece of data there. And this one here is the same thing, breadth and seasonality. However, you go forward 12 months, there's a pretty good return rate there. 90% of the time, it's higher. That's why I'm just looking out midterm here. We're coming into the end of the year with the election in the US. Obviously, we don't have one in Australia this year, but the US is going to be a very big one. And this is our seasonality pattern for the election years. So we're in this pink line here, and it's basically, you want to update it into June, this thing's just been going up and up and up. There are corrections. You can see it in almost every line, and they're around that sort of 2%. I suspect if we do see it, we'll see larger than 2% because we've seen larger gains to the upside. Therefore, that's why I'm looking at the volatility being increased leading into these periods of time, especially around elections and after such significant moves to the upside. So the volatility is the tricky part to overcome. If you remember, or if you're experiencing it now with your cryptocurrencies, you know those really big moves to the upside and then those 50, 60, 80% drops. I think they're going to be closer and closer, like we saw with into the bull market peak 2021. Big moves to the upside, 30, 40% drops, big moves to the upside, another 20-ish. Big moves. You had a 53% drop, a few months of consolidation, another move to the upside. Bitcoin in 2017. This was my first Bitcoin bull market. I was getting in around March and April. So I remember those very vividly, the moves to the downside. That was so wild, and it just sped up time and time again. So you had less time to the downside, market springs back up very, very quickly. And even on these single days, which don't look like anything now, like this day here, I had a friend message me, should I get in? And I said, it's getting very friggin' hot. And he was just like, oh, thanks for not, thanks for talking me out of it. Because essentially he would not be able to ride a move from 9,500 up to 11,500, which is where he was going to get in. Then it came all the way back down that day to 9,000 dollars for Bitcoin. Yeah, sure, it went on, but there is no way most people are going to hold through all of these moves where you got very significant ranges in the volatility. Like, you can just check that out there. Over the matter of a few days, 45% loss on Bitcoin. So we've probably all seen those type of swings before. Bitcoin at the moment hasn't been putting in those swings. Who knows? Maybe it doesn't, but I think the majority of people are going to be throwing some of their Bitcoin or some of their hard-earned cash into cryptocurrencies, which I would bet are 100% that you're not going to see any cryptocurrencies do less than a 20% drop. I would say that every single cryptocurrency is going to do more than a 20% drop, and there's going to be some wild swings. I think most of you agree with that, so I'm not going to bang on about that one anymore. This is all in preparation of the ride ahead. Yeah, I know I've talked about it being the worst. I tried looking up another word, but I mean, I'm not going to put any of these words into the title there. Honestly, I see it as the worst. You might not, but bull markets are the worst. Well, I think they're the worst. They're great for making money if you're only trading long, but they're the worst in terms of emotions, and they are the most difficult to ride out. I personally think bear markets are way easier. You've got ranges that you can follow. You've got sentiment you can follow, and most people are scared most of the time. So I think it's much, much easier to be contrarian to that. When it comes to the bull, you just don't know where it's going to end. It just keeps pumping, and you get these big significant pullbacks, and then people wait and like, oh, can it pull back more? And then it just takes off without them. So to me, if I'm comparing the two, bull market worst, bear market best. But we need both in an environment where we're going to make some money. So hold on for the ride. This is the bull market, and have an exit plan. You don't have an exit plan, plenty of videos on the channel. However, if you want even more detail and more structure, check out TIA Premium while we have that sale on. Check out some of the reviews as well. So this is where we are right now. I think we've got this next leg up. Don't try and exit 100% of your portfolio all at once. And I do the same thing with entries. I don't try and enter 100% of my portfolio all at once, which is what I've been talking about over the last couple of months with the altcoin space here. You've got the low in April, and now we've got this second low, and it's a higher low at the moment in June, where there's some potential opportunities. Now, you can wait for the buy the breakout opportunities where the market starts to consolidate, and then you get that breakout here or the next breakout, depending on how much confirmation you need. Do you need to see it at a higher term time frame to break out, or you just want the lower term time frames, knowing that there's more risk to the downside, like meaning that you might be wrong more often if you're just waiting for the short term breakouts, whereas you wait for the long term breakouts, well, you pay the price because you've had to wait, but you've got more confirmation. So that's where we're looking at here. It's okay to be cautious. They don't call it a bull market for no reason. So again, it's okay to be cautious in the bulls. Play defensive once you've got your position set. I'm excited now because I think there's a good opportunity to set positions now in this period, not all at once. Remember, some people think we have to buy everything at once. Don't be so stupid. Layer some in because there could be other opportunities, and then you can buy the breakout anyway. So yeah, hang on for the ride. Bull market's much more difficult than bears, obviously, in my opinion. That's why I'm presenting it here. Enter on pullbacks or early in trend with confirmation. It's more risky to be out than in during a bull, because obviously the gains to the upside, and it can just keep going and going and going. Markets can remain irrational longer than you can remain solvent. Let's remember that for this period here, this winner's curse phase, where real estate's continued to go up. Stock markets, again, keep touching all-time highs. And as I've suggested, maybe there's going to be some volatility eventually. Bull markets will do everything possible to shake out investors. Volatility, you need to take profits to pay yourself. Too early depends on your entry point. So people are going to tell you you're getting out way too early, but that's because they probably only got in the last couple of days and they're not up enough. Whereas you might be in nice and early, and so if you're in at 30 grand, you're getting out at $65,000 for Bitcoin. Well, you've got some profit to at least look back on, whereas a majority of people probably got in at $70,000 and they got nothing to look at now. So it all depends on your perspective. If you can't stomach violent corrections, trade with less capital. The risk increases the higher the market goes because there's more downside to come with less support along the way. So Bitcoin at the moment is still sitting around that $65,000. We haven't got the breakouts yet. Therefore, we're still in a trading range. And looking at timeframes here, well, we've talked several times about the 4 to 6 months period that we're looking at since that signal. So still coming into that quarter 3 of 2024 to give us a little bit more of an idea of where we go next. In yesterday's video, I went through detailed analysis on price levels for Bitcoin, where it would still remain in a macro bullish market. And just to have a look at that again today, somewhere into that low to mid 50s, still okay. I'm not saying it gets there, but it's still okay for this stage of the cycle. That's one area that I am looking at. But for now, it's still just sitting at $64,000, $65,000. So I'm not overly concerned. And as I said, if it does get that low, I'm still not overly concerned either. It would have to break through the low 40s, low to mid 40s for me to be concerned, because that's basically where the market tipping point is for the macro landscape, for it to go from bullish into macro bearish. So we're a long way from that. It could happen. But for now, even if I did see any drops to the downside, I still see them as pretty good opportunities, and I would have my stops further down just in case I am wrong, because at the end of the day, no one knows what happens on the right hand, the black side of the chart. Ethereum also looking pretty good, putting in lower highs and higher lows at the moment, and we have covered the average true range as another signal that the market is winding up for another move to the upside. So we're watching the ranges of the bars contract, and they typically go dead for several days, several weeks, maybe even months. But as we get towards the end of the bull market, these periods get shorter and shorter. You can see the price ranges there, and this is the price ranges here, and there's the average true range. Longer, shorter, and then shorter again before it really starts to take off. And that is where things get very wild. If you're not in, that can destroy your portfolio because you're trying to get in and it just takes off without you and comes all the way back, and you're basically buying up here and then selling down here and then waiting again, buying up here and then selling again down here, and you basically screw up the entire bull market. Happens time and time again. At the moment for ETH, everything still looks on track and it's playing ball with the other strong altcoins here. Similar deal with Solana. We've still got lower highs, higher lows forming, and it's sitting around those 50% levels. Can come all the way back to roughly around that $100 and still be able to base out and have a still be in a strong position for that next stage of the cycle. Total cryptocurrency market cap still on track as well. As I talked about yesterday, looking at some hallmarks of a significant low or close to a significant low. Maybe it does come down a little bit further, but I'd say it's within the ballpark now of some sort of low that needs to form. And just looking at a quick fun thing here at our fractal back from earlier this year. So this move into that peak. Many different things can happen, but I wanted to end the video on something a little more positive where you see the market go dead. The average true range, as we've talked about, going dead. You've got your lower highs forming, maybe your higher lows as well forming, and then you just start to see these breakouts and the market essentially takes off without the masses, and they start to buy in at the peaks. They get wrecked, they try to buy in again, and they get wrecked, and it's just a rinse and repeat that happens faster and faster and faster on each of the assets that you're looking to invest in. So I'm going to leave you with the quote from Gann yet again. A successful trader studies human nature and does the opposite of what the general public does. The general public is going to view this as the best times for them to get rich and get out of their jobs. I hope for your sake and my sake that we're able to actually make the money that we've come here for. And if you've got your goals to get out of your job or start a business, maybe buy a property or put a deposit on a property, whatever it might be, I hope you make that experience a reality throughout that bull market. Stay cautious. Don't worry about what the masses are doing, what they're all saying. They're all getting super excited. We're in this period here where I think this is coming next, and your time to be excited is once you've claimed those profits into your bank accounts. I'll see you guys back here at the next video. Have a fantastic weekend. Take care and peace out.